Your thoughts on the action and the tweet storm that caused the action on Wall Street today, and just in terms of how much of a game changer, if at all, this was?
Well, President Trump is playing a game of chicken, and I don't think the stock market likes it at all. It's my belief, I've stated this, that at the end he's going to turn the steering wheel away at the last moment. This is his way of getting to a deal. But if he, keeps on threatening tariffs and raising tariffs, it's going to be very bad for the market and the economy. And I think his advisors, and deep down he knows that, he's just going to try to get the best deal he can. But I'm certainly not surprised at this ramping up that would cause a 700-point drop in the Dow.
Jeff, obviously, this additional escalation in the tariff war is not a welcome thing, but put it in some context here. We now have, pretty firm, resolve on the Fed's part at this point, probably after today's news, that it will be easing in September, probably more to come after that. The U.S. economic numbers have been okay this week, and the stock market has been wobbly, but has not really gone to fresh lows for this month. So what do you think of the market's response in the context of all that?
Well, I think the market is counting on the consumer to continue to hold up this economy. We know manufacturing is now slipping into a recession, even in the U.S. That's a global thing. We have seen business leaders begin to pull back on their spending plans, but not yet on their hiring plans. So the job market remains solid and the consumer remains solid, but that's a difficult thing to foresee. Certainly, we could begin to see that pick up, as we've already seen in the Challenger Gray and Christmas data on potential job layoffs. That's a concern. I think if you've got to step back from all of this, the one thing to take away from today is diversification. We saw foreign markets, particularly in Europe and Japan, hold up a lot better than the U.S. today. They are not in the crosshairs of the U.S.-China trade battle, and that may say something. Still vulnerable to the global economic slowdown, but not the increasing threat of these barriers that could be applied to individual companies and have further downside for markets.
I mean, yes, it's an escalation of trade fears, Jeremy Siegel, but two things were a little bit different today, and that was one, the president using Twitter to say, I hereby order U.S. companies to step out of China and come back home. I mean, that's not an engagement strategy. No. If you're worried about the strong dollar's impact on earnings, you should see what would happen if U.S. companies had to pull out of China. Well,
I don't think, a lot of the words Trump uses are not well advised, and I don't think he means by orders he's going to put out a presidential order saying do not buy from China. I think he's going to try to persuade them not to buy to China and hope that firms will move there. But I really think the fears that there might be some sort of presidential order on that are really not well-founded. Going back to the Fed, it was over 2 weeks ago, I was, I think, on your program saying they should move down 50 basis points. I mean, the 10 years back to 150, the Fed funds at 210, that's 60 basis points higher. I mean, that's really an inversion. And, I think if Powell and the Fed lowered it 50 basis points, and they take that off the table as one of Trump's excuses for, hey, maybe the economy is, reacting badly, and it will be on him at that point. And I think there's really very good economic reasons for them to actually move aggressively. I thought it was very interesting. There's a battle royale going on at the Fed. There's two groups. That one group that says the economy is doing well, I'm not moving. The other group looks at the term structure and the yield structure and what's going on and says I'm really worried. And I think this next September meeting is going to be one of the most contentious that the Fed has had for years.
Nancy, we're going to hear from Richard Clarida right here. Do you think the Fed still has the ability to soothe this market just with words at this point?
No. I don't.
No?
I think the market understands that the Fed's in a bind, and so maybe the market's still expecting too much, but I think 25 basis points is kind of universally understood. So I think we have to look to companies, and I thought this co-CEO of Salesforce kind of gave some good news today, or yesterday. I don't even know what day it is, but
last night.
Last night,
it was.
when he said, CEOs around the globe, when they have problems, they're looking to us, and you saw it in their sales number. They raised guidance. That's what I think investors should be focused on, because the Fed is not designed to determine the market's end results. So I think we need to step back and go to fundamentals.